America sends $20 billion overseas, not to US farmers, but to bail out Argentina. Within hours of that lifeline, Argentina slashes export taxes on soy, corn, and wheat. And China, it pounces instantly, snapping up 40 cargoes of soybeans in just 1 week. Billions in trade gone, markets gone. American farmers watching helplessly as their debts explode and their future evaporates. And the bitter truth? US tax dollars just armed Argentina to steal the very markets America's farmers were promised would be protected. This isn't just a trade misstep, it's the $20 billion betrayal unfolding in real time. It's late September 2025. While American farmers bring in their harvest, something unprecedented is happening half a world away. Argentina, drowning in debt, on the verge of collapse, is suddenly given a $20 billion lifeline from Washington. The Trump administration frames it as financial diplomacy. Officials insist this is about stability and preventing global contagion. But for farmers in Iowa, Illinois, Ohio, and across the Midwest, those words mean nothing. Because within days of the bailout, Argentina suspends its long-standing export taxes on agricultural commodities. For global buyers like China, it's a green light. Argentine soybeans become instantly cheaper than America's. And China, the world's biggest soybean importer, it moves with speed and precision. Reports confirm at least 10 cargoes booked immediately, 20 the next day, and 40 by the end of the week. That is a tidal wave of trade, tens of millions of bushels shifting away from the United States almost overnight.
Let's cut into the hard data. Since May 2025, China has not purchased a single cargo of US soybeans. Not one. Through July, American soybean exports to China are down 51% compared to last year. By September, sales are effectively zero according to traders. Now add Argentina's sudden advantage: no export tax, cheaper cargoes, and a bailout cushioning its economy. In one move, China locks in months of supply at Argentina's expense, while US farmers watch their market evaporate. This is the raw consequence of global trade politics colliding with local reality. A farm family in Indiana doesn't measure success in foreign reserves or bond stability. They measure it in bushels sold, debts paid, land kept. And on those counts, the collapse is visible everywhere. But this isn't just about Argentina. It's about years of policies that stack the deck against American farmers. Trump's tariff wars, designed to punish rivals like China, have already raised costs for farmers at home. Fertilizer, tractors, seed equipment, all more expensive under broad tariffs. Meanwhile, China retaliated by slapping tariffs on US agricultural goods, making them less competitive abroad. So farmers face a double blow: higher costs to grow, lower demand to sell. And now with the Argentina bailout, even their last lifeline, China's soybean demand, has been rerouted. The numbers on farm distress are stark. Farm debt is at record highs. Bankruptcy filings have surged. Lenders across the Midwest report rising defaults, with soybean producers among the hardest hit. Rural banks are sounding alarms about a 1980s-style farm crisis making a comeback.
On September 25th, Trump announces that tariff revenue will fund relief for US farmers. He calls it a bold solution, but the farming community isn't buying it. 3 days later, a letter lands on the president's desk, signed by Senators Amy Klobuchar and Elizabeth Warren, dated September 30th. It cuts to the bone. Farmers don't want short-term aid checks. They want fair trade. They want steady markets. They want certainty. The letter reads, "Tariff relief cannot replace the long-term damage done by unpredictable trade policy." In other words, subsidies are no substitute for stability. Farmers don't want to be wards of the state. They want to compete. But Washington's gamble has left them weakened and exposed. Soybeans are the headline, but the Argentina bailout triggered a much broader shock. Corn, wheat, barley all saw export taxes lifted during those crucial days, and global buyers didn't hesitate. For weeks, grain shipments out of Argentina spiked, crowding out American suppliers. It's not just farmers who feel the squeeze. Consumers eventually do too. When farm incomes collapse, production falls. When production falls, prices rise. The grocery store, the dinner table, the school lunch program, they all bear the ripple effect. Here lies the deepest contradiction.
America spent $20 billion to stabilize Argentina, yet that very bailout armed Argentina to steal America's agricultural markets. Think about that. U.S. taxpayers footed the bill. Argentina cut its export taxes. China secured cheap grain, and U.S. farmers were left with empty silos and mounting debt. This isn't foreign policy success. It's a case study on how global aid, trade wars, and domestic politics collide to create losers at home.
The first act of this story is already brutal. U.S. money flows out, Chinese ships load up in Buenos Aires, farmers in the Midwest watch their markets collapse. But the second act, it's even more dangerous, because this isn't just about soybeans or even farming. It's about America's credibility in the global market. It's about whether the US dollar, the trade system, and America's role as a global leader can survive policies that backfire this spectacularly. What started as a farm crisis is rapidly mutating into a credibility crisis, and here's why. When the US bails out Argentina with $20 billion in taxpayer-backed funds, but its own farmers collapse, global players see weakness. They see inconsistency. They see America protecting foreign markets while leaving its domestic backbone exposed. And that's not just embarrassing, it's destabilizing. Because global trade runs on trust. And trust, once lost, is almost impossible to recover. Let's strip this down. In less than a week, China went from frozen relations with U.S. soybean exporters to becoming Argentina's biggest customer. No negotiations, no tariffs lifted, no concessions. Just a ruthless shift in buying strategy, empowered by Argentina's tax holiday. And the best part for Beijing, it didn't cost them a cent, because Washington footed the bill. U.S. dollars stabilized Argentina. Argentina cut taxes. China bought the grain. And America lost the market. That's not trade strategy, that's self-sabotage. Now, let's go back home. The collapse isn't theoretical anymore. Reports out of the Midwest show lenders tightening credit. Bankruptcies in soybean-heavy states like Iowa and Illinois are rising. Foreclosure signs are popping up again on family farms.
This is the exact nightmare farmers feared, a repeat of the 1980s farm crisis, when high debt, low exports, and political missteps forced thousands off their land. Back then, interest rates crushed farmers. Today, it's tariffs, retaliations, and bailouts gone wrong. One farmer in Indiana summed it up in plain language. We don't need checks, we need markets, and they just gave ours to Argentina. Inside Washington, the spin is relentless. The administration insists the bailout was about stability, that tariff revenue will cover farmer aid, that America remains competitive. But the reality is brutal. Farmers don't trade in political talking points, they trade in futures contracts, soybean bushels, and debt repayments. Relief checks can cover a season, but lost markets can take decades to recover. Once China builds infrastructure and logistics ties with Argentina, it doesn't simply flip back to the US on a whim. Those deals become permanent. And permanence is what terrifies farmers most. Here's the part nobody in Washington wants to say out loud. If America can lose soybeans this fast, what's next? Corn? Wheat? Beef? Dairy? Each sector is exposed, each relies on global markets, and each could be replaced if a rival nation, armed with US support, steps into the gap. Think about energy. The same logic applies. If bailouts abroad destabilize US suppliers, rival exporters like Russia or the Middle East gain ground. The soybean collapse is a warning. If America keeps funding foreign competitors while punishing its own producers with tariffs, the dominoes will fall far beyond agriculture. Now, zoom out. This isn't just about soybeans, it's about the US dollar.
For decades, America's ability to project power came from two things: military strength and dollar dominance. But both rest on credibility. When the US spends billions stabilizing others while its own economy buckles, it undermines confidence in the system itself. And rivals are watching closely. BRICS nations, Brazil, Russia, India, China, South Africa, are openly building alternatives to the dollar in global trade. Every misstep by Washington makes their pitch stronger. Argentina's bailout may look small, just $20 billion, but it signals something massive. America will bleed itself abroad even as its own producers collapse, and that weakens the foundation of dollar power. So where does this lead? Analysts see three scenarios. Scenario 1, quick fix. The US injects relief, Argentina reinstates taxes, and China quietly returns to buying limited US soy. It stabilizes prices, but the damage to trust lingers. Scenario 2, permanent shift. China deepens its dependence on Argentina and Brazil. US soy exports remain crippled for years. Farmers consolidate, debt spikes, and small farms vanish. Scenario 3, full domino collapse. Other commodities follow soybeans. Corn and wheat markets tilt south. BRICS leverage America's inconsistency to argue for de-dollarized trade. The farm crisis becomes a systemic crisis, reaching banks, supply chains, and eventually consumer prices across America. Which is most likely? Analysts say scenario 2, the permanent shift, because logistics and trust, once built, don't vanish overnight. Behind every headline statistic is a human face, a farmer staring at unsold grain, a family weighing whether to keep land or sell it, a community watching young people leave because farming is no longer sustainable.
In places like Iowa, Kansas, and Minnesota, farmers are not just producers, they are the economy. When they fall, small towns fall with them. Schools shrink, businesses close, and an entire way of life fractures. That's why this isn't just an agricultural issue, it's a national issue. It's about whether America values the very backbone that feeds it. So here's the bottom line. America bailed out Argentina with $20 billion. Argentina cut farm taxes. China seized the moment, and US farmers, they paid the price. The numbers are undeniable. 0 soybean sales to China since May. Exports down 51% year-on-year. 40 Argentine cargoes booked in 1 week. Farm debt at record highs. This isn't random. This is cause and effect. Policies colliding with reality. Bailouts abroad, crushing livelihoods at home. The truth is uncomfortable. US taxpayers just finance the collapse of US agriculture. And unless the course changes fast, soybeans are only the beginning. The betrayal is not abstract. It's happening in real time, in silos filling with unsold grain, in families crushed by debt, in markets America once dominated, now lost. And history will remember this moment not as strategy, but as surrender.